Alright boys, welcome back to another video. Today we're going to be talking about equilibrium, discount, or premium, whatever you want to call it, and how we can use it as a valid retracement. Alright, so this is day 5 or 6, it's one of those, can't remember, of the Path of Profitability Bootcamp, where I teach you all the concepts I use, and in the last video I will teach you my strategy so that you may have a good grasp on all these concepts and my strategy so that you can become profitable and start printing too. All right, so let's get into equilibrium. Right, what is it? It is a area on the chart that is a discount for price to retrace into. Why is this important? Why might you ask? Why is this important? Well, it's very important, right? Let's actually go into how we mark it out, right? So I'm going to use this box real quick. It's the GAN box on your trading view chart. Let's go to the settings so you guys can see my settings. These are the settings for the GAN box, right? No background, no background. All this good stuff, right? So yeah, that's that. What else? Let me see here. Yep. So that's all those settings. Do whatever you want with those. But for an uptrend, you're going to mark it from the lowest low up to the highest high. And then whatever is in discount, like all this below here, this is considered the discount, right? This is considered not, all right? For a bearish example, it's just going to be reversed, right? Just like that. Everything in discount would be above. So below is uptrend, above is downtrend, all right? So this is how we mark it out. Now, why is it important, right? Think about this, right? If you were going to a store, a grocery store, supermarket, whatever, right? Would you try to get the best possible price for whatever you're buying? Yes, I hope you would, all right? Everyone wants to save money. So if you want to save money, what makes it any different from all these big firms and everyone else trying to save money? Nothing, right? They're always going to try to save money. So that's why they have discount zones like this, right? The discount in a trend is here, here, based on the trend, right? Where buyers can buy back the dip, like buy the dip, right? If price comes down, you want to buy it back up because you expect that it's going to continue to go up, right? That's why they say buy the dip, right? Because they want to buy it at a discounted price. Because why would you want to buy it? Why would you want to buy it up here when you could buy it for a lower price down here and catch a whole better move, right? You want to buy it at the best possible area. So that's what a discount is, or equilibrium, right? Rebalancing price as well as fulfilling those orders in that discount for the, big traders and the market makers, right? So it's very important. Used as a retrace slash discount tool for price to retrace into. All right, it's used as a retrace slash discount tool for price to retrace into, right? That's what it is. It's just like a fair value gap, right? But when you pair with a discount and a fair value gap, it is very, very high probability that price will continue in the direction of the trend, right? So that's pretty much discount. Let's get into some examples of how it works and why it works, okay? And I'm saying price will not always come into discount, all right? It won't always. And here's a good example, right? We drop from the high, or the low to the high, right? What does price do? Comes back into discount of the range, right? Actually, it should probably be here, right? literally taps it, taps discount, and then continues higher, right? But as you can also see, pairing this with a fair value gap, right? It's a very, very strong area for price to continue in. It's used as a retrace continuation model type of thing, okay? Let's see a bearish example. Let's see if I can find one. Right here, right? Here's a good bearish example from the high to the low right here. What does price do? It comes up and continues lower. Also, you can see it's paired, oh, wrong tool. It's also paired with a fair value gap, just like that, right? So that's pretty much how you use discount. If you don't really understand what it is, it's just think of the supermarket example I gave you guys. Think about it as, you want to buy it for a better price. So would you buy it at the top? No, you would buy it at the discounted price in the given area, right? In an uptrend, it's going to be below the 50%, and a downtrend is going to be above the 50% line, okay? So getting into your guys' homework, it's pretty short. All you have to do is identify 5 examples of equilibrium being respected as a retrace tool. Identify 5 examples of equilibrium being paired with a fair value gap as a retrace tool. So that's exactly what I just gave you guys, all right? You have my settings. You have everything that you need to know about equilibrium, all right? This really was a short video. I mean, there's nothing else to it. I feel like it's a pretty easy concept to understand. I pretty much use it as a confirmation tool. If I already see my entry, everything, I just kind of discounts kind of that extra step that's like, oh, okay, it's really good confirmation with all the rest of my confluences to actually take a trade. So that's the end of the video. Stay tuned for the next video, the day 6, day 7 video for the Path to Profitability Bootcamp, and I will see you guys in the next one. Peace out, boys.